Hello and very warm welcome to all of my dear friends. How are you all? Hope all of you are very fine. As discussed earlier, we have been waiting for another video, and this first part which we have already watched, and we have come here with another part of that accounts basic, that is part 2 here. I hope you have already watched the first part. Now we are going to watch the second part, and I let you know that whatever the questions which we have asked here are very important and frequently asked in your Jaiib exams. These are very helpful, so don't forget to watch it. Please do watch it till the end. And before we start, I would like to urge everyone, please do subscribe to our YouTube channel, because more and more people subscribing to our YouTube channel helps us and motivate us to work harder for your betterment, so that we can bring more and more relevant videos which will be very helpful to you. Now, without wasting our time, let us start with the first question here, and you can see that first question, you can give the answer also, you know it. The first question, if you read this, dash implies that accounting principles once selected and adopted should be applied consistently year after year. So when you read this word consistently, you can understand that once any method, once any practices we have applied, and we are applying it consistently, continuously, again and again. So those concept, it is which concept it is telling, you can easily understand which concept. So it is a concept of consistency only. This word is coming, that means that you don't need to watch any other thing. Consistency is very easy by the word consistency, and by the word matching we can see that if the word is consistently here coming, then it will always be under concept of consistency only. Next question, we can see this is a very important question. An investment company has been valuing its inventory of land at a lower market price or cost. It now wants to value its inventory at current market price, which is higher than the cost. Which accounting concept will be violated? Here, please do read the questions carefully, because here asked which accounting concept will be violated. That means which accounting concept is violating here, which we are not following here, because according to the cost of concept, what does it says? That if you have purchased any land, for rupees 100 say, and nowadays that land costs rupees 1 crore. If you are writing in your accounts book, your cost concept says that always your land cost will be 100. This is what cost concept says. But if you write 1 crore, that is the current market price, then it will be what? It will be violating your cost concept. So here only it has asked that which accounting concept is asked, because they are following what? They are writing inventory at current market price. So this is what cost concept is violated here. So correct answer will be cost concept only. Moving on to next question, that is 12 televisions sets of rupees 10,000 each are purchased. This event is recorded in the books with a total amount of rupees 1,20,000. There is an example of adherence to dash convention. So this is which convention is used. You need to write the correct answer. So you can see here disclosure, materiality, conservatism, consistency. So correct answer will be what? Materiality only, because we are writing the correct answer here. So correct answer will be materiality. Next, current liabilities are those which are payable within. So all of you know, if you are learned about balance sheet, you know that current liabilities are what? Current liabilities are which payable within a year. So correct answer will be 1 year, not 1 day, 1 month. All this are wrong. Okay, so correct answer will be 1 year. All current assets which you are going to expend, all these are current assets, and which you are going to pay are current liabilities. Assets that are kept for short term for converting into cash or for resale are called. Just now I told you that which you are going to spend, or which you can resell, which you can convert into cash. All these are what? Current assets only, not operating, not liquid, not tangible. Remember that. Assets that are purchased for the purpose of operating the business but not for resale. So here we have got assets that are purchased for purpose of operating, that we are not going to sell when sell, because here we are using these assets for operating the business. So these are what? Fixed assets. These are never current assets, because current assets that we can sell it, we can convert into cash. But here we are having the fixed assets which we are going to have it for long term. All these are fixed assets only. Next question, Maqsood, an agriculturist plans to grow more crops in his lands, approaches for bank for a loan of rupees 50,000. Since he was unable to furnish proper financial statements, you ask him, what are the things that you own? So when he doesn't show, show any kind of proper financial statement, you don't have an idea that how much income source does he have. So for at that time you ask, what are the things that you own, that you have? So all these things are what? Is it equity? No. Is it assets? Yes. Because what are things that he owns is his assets only, not liabilities, not income. So correct answer will be assets. Next question, if the total assets of a firm are 1,45,678 and outside liabilities are rupees 56,785, capital contributed by the owner. So what do you know? What is the correct formula for that? You know all assets are what? Capital plus liabilities. So here we have what? Total asset is there. That means 1,45,678 is there. And we don't have capital, but we have liability, that is 56,785. So you can easily find out this capital by deducting your liability from your assets. You will get the capital. So what will the correct answer? Correct answer will be 88,893. That will be the correct answer, capital. Okay. Next question, if capital of a business in rupees 20,000, that means we have got the capital, and liabilities are 5,000, that means we have got liabilities also. Then and loss is 7,000. The total amount of asset is. So here you need to understand that asset is what? Your capital plus liability. But if there is any kind of loss, it will be minus, or it will be deducted from your capital only. Okay, it will never be deducted from your liability, it will never be deducted for anything else, it will be deducted from your capital. So minus it from capital only. So you can write it here that you have loss of 5,000, sorry, your loss is 7,000. So what will be your asset? Capital, that is your 20,000 plus 5,025 minus 7,000, that will be 18,000 will be your asset. So correct answer will be what? 18,000. Now if there is any profit, here we can see that if total asset of business of 1,30,000 is what? Your asset, and that is capital is what? Net worth is 80,000, that means your capital only, that is 80,000 plus your profit is 10,000. This is what? Profit. That means it will be added to your capital only, and if there is the loss, it will be deducted, that will be negative side of capital. Okay, and so plus liability. So you can easily find out the answer. Asset is 1,30,000, capital plus profit, that means 90,000. So liability will be, the correct answer will be 40,000 only. You have got the answer. Next, Zara commenced her business on 1 January 2013 with a capital of rupees 30,000. On 31 December 2013, her assets were worth rupees 50,000. So you can see that her capital started with a capital of 50,000 and her assets were 50,000 and liabilities amounted to 10,000. So that means what? Her assets now 50,000. She added capital of 30,000 and she has liability of what? 10,000. That means total it is amounting to 40,000. So how much profit does she earn? Here you can easily understand that there is total profit of 10,000. So correct answer will be 10,000 only. Next, Mr. A had a capital of rupees 75. 75,000. She also had goods amounting to 15,000 that she had purchased on credit. So you can understand that she purchased on credit, that means liability, and for which she had not paid, because it is already said she had purchased on credit for which she had not paid. The total value of assets of the business. So capital, you can easily understand, capital is 75,000 plus 15,000 she has purchased on credit, that means it is liability. So asset is what? Capital plus liability. So correct answer will be 90,000. I hope you understand. I hope this will help you a lot while appearing on your Jaiib exam. If you have any kind of doubt, kindly do comment. I will help you all, and I will comment. I will reply to each and every comment. Thank you for watching.